Yo, what's good, guys? It's KYV, and today we're gonna be starting the cracking correlation lessons. And what better way to start with SMT Divergence, which you guys have probably heard of. I like to explain it a little differently than everyone, so in a way that people will understand. And first, we gotta go over what a cracking correlation is. So chances are, if you're watching this video, you trade NQES, something like that, some type of like index future. And the truth is, all these assets are correlated. So what that means is they all move the same. So if it's most likely that if NQ is in an uptrend, ES is also going to be in an uptrend. Or if YM is in an uptrend, then then NQ and ES will also be in an uptrend. So they're all correlated. And there's a triad or a trio which all move like in correlation, and that's YM, ES, and MNQ. Sorry, just regular NQ. And to be honest, I only really focus on ES and NQ because I feel like YM does lag a little more, and it's just pretty chopped. So a lot of the SMTs are invalid that are formed with YM and another pair. But yeah, so let's get just straight into what an SMT is. So basically, let's say over here we have NQ. So as you can see, NQ is an uptrend, and NQ ends up sweeping this high. And we already know that this is a liquidity sweep right here. But as you can see, ES is moving in an uptrend, and it fails to take out this high, unlike NQ, and we just start going bearish. We flip, and the high being taken out on NQ and the high not being taken out on ES is what forms our SMT divergence. So basically, it's just when one asset is lagging and it fails to take out the same high as the other, or high or low, and the other asset that failed to take out that high or low starts reversing. And the reason this is important, because a lot of the time, let's say you're trading NQ right here, ES. Say you're trading ES, you will want to look for a liquidity sweep a lot of the time. So like, for example, you want to see this liquidity get taken out before we continue lower. But if you go check NQ, NQ already did that, and NQ is already starting to trend downwards. So what you think might just be higher highs and higher lows forming might actually be that reversal that you were looking for. Which is why it's important to know the concept of SMT divergences. And unfortunately, I can't go too much into detail in this video on how to like really identify high probability SMTs, but I for sure will in another video. But let's just go over some examples on the chart on finding SMTs. So what I'm actually going to do, I believe right here is a great example. So as you can see right here, this is today's market open. We have this high that NQ swept. So right here, that is a high that NQ swept. Now let's go on ES. And as you can see, ES did not sweep that high. ES was actually lagging very hard. So right here, we form our bearish SMT between NQ and ES. So right here, boom. And what that means now is that, as you can see, since ES is more bearish than NQ is, because we're already lower than this high, we're kind of accumulating, as you can see, and then we form that SMT that's a bearish signal. So we start displacing downwards. If we check NQ, we also do start displacing downwards. So we get that IFVG after the SMT formed. We also have a sweep of liquidity. So your entry could have been this CISD, breaker block, and then target wherever. And as you can see, boom, SMT played out almost perfectly. So let's look for some more examples. Now again, it is kind of a pain to look at or like try to find, because you have to really look between both charts in order to find SMTs. But they're very powerful tools, so it is definitely necessary. So I believe we do not have one here. I'll find one and I'll cut the video back on. Alright, so right here is another example. So on ES, we have these two highs. So right here we have this high and this high. So obviously, as you can see, we did end up shorting after this. And if you're going to look for shorts, you'd probably look for the liquidity sweep, right? But as you can see on MNQ, we actually took out that high. So that formed us a bearish SMT with ES. And the reason being is because ES failed to take that high. But NQ took out that high, so we can actually anticipate a reversal without that high being taken, because boom, these assets are correlated. And as you can see, that's exactly what we did. So I'm actually going to look for a bullish example. Right here, actually there's another one. So as you can see right here, we have this low and also this low. And on NQ, we ended up sweeping that low. And on ES, we didn't. So that forms us a bullish SMT. So right here, boom. ES did not take out that low. It failed to. But as you can see, we still had a small move up. And same on MNQ. We also did have a small move up before continuing lower. So that is our bullish SMT. And that's about it with SMTs. This is going to be the first lesson on cracks and correlation. We'll definitely 100% go into more detail on how to find high probability SMTs, such as why this one failed compared to this one. Because there is actually a reason that this one did not play out as well as this one. So we'll go over all that, and yeah, that's about it for this video. So I'll see you guys in the next one.